Hi guys, Kang here, and this is another video where I want to share with you a very unique opportunity that I'm actually looking at, and there's a huge upside opportunity to this. Okay, this is not a specific kind of like a trade position, but it's more of a long-term investment opportunity. And some of you perhaps who have been following me sometime would already know that I don't only look at the technical charts, but we look at various factors from a very comprehensive perspective to identify companies and even opportunities that we're looking to get involved in the financial market. Okay, so I hope that through this video, not only you'll be able to benefit from the idea itself, of course doing all the heavy lifting for you in this video already, okay, but I want you to also focus on the process, the system, the approaches, and of course the thought process where I put in, so that at least you not only benefit from the idea, but you also can get an idea, or I would say an insight into how we approach the market, and hopefully you'll be able to pick up some things or two through this video. Okay, so with that, I'll dive straight into my computer. I'll share the screen with you so that you'll be able to see what are some of the tools, what are the process, and of course the charts, right? Where are some of the opportunities available. Okay, so without further ado, let's dive straight into my computer. Now, this particular company, of course, you might be already very curious as to what this is. Okay, the company that we are referring here is Valero Energy. So ticker symbol VLO. Okay, it's of course a company that is involved in the energy sector, and for the past 1 year or so, energy companies are not performing very well, especially in 2019. Okay, but moving forward, there might be a shift. Okay, and over here, let me walk you through that process from a top-down approach before we go into the individual company fundamental analysis, the valuation analysis of this company. It's important for us to understand the macro perspective, the big picture. Okay, so let me go to the macro perspective to give you an idea where we are right now in terms of liquidity, in terms of the macro environment. Okay, so this is last updated as of December 2020, which is where we are right now, right? So this is all the latest data. You can see the overall liquidity as of now is 5, the maximum is 8, which means that not too bad. The current macro environment is pretty liquid. When I mean liquid here, we are referring to the stock market generally will be supported if the macro environment is liquid, because liquidity eventually moves the market. Okay, but one component that you want to take note of is that the percentage of stocks above the 200-day moving average right now is about 85%, which is more than 70, and usually that means that it's a little bit overbought, and there might be some kind of retracement of the pullback, and that's where we want to be a little bit cautious. Okay, but that's the only thing that is we need to be cautious of, right? But in terms of the big picture, the entire stock market, financial market is pretty liquid. Okay, which means there's still upside potential. Okay, now understanding the macro, we also look into the economic cycle, which it's also another word for sector rotation. Okay, and of course there are some factors that we consider, some indicators that we consider to identify which phase of the economic cycle we are in. Okay, and of course earlier this year we are in a full technical recession, and right now, based on the indicators that we are tracking, we are slowly shifting towards an early recovery phase. Okay, so you can see a mix of kind of like 2 indicators are pointing under full recession, 2 indicators are under early recovery. Okay, and of course moving forward into 2021, 2022, we'll move out of recession and go into early recovery. And of course eventually it's a cycle. So from early recovery, we'll reach a peak of full recovery and the whole cycle repeats itself. Okay, but as of now, moving forward into 2021, 2022, likely we are going to transit into early recovery. Okay, and I want you to reference to this chart over here, and of course you can also see over here. Okay, when we are going into full or early recovery, there are certain sectors that tends to perform. If you have been actively looking in the stock market this year, earlier in 2020, you realize that a lot of all these technology companies have already been benefiting from the economic cycle, benefiting from the sector rotation concept. Okay, and a lot of technology sectors has been rallying, right? But moving forward, there are certain sectors that tends to perform perhaps better from here, or I would say the upside potential is where you want to focus on. Okay, and energy is where you can see under early recovery, economic cycle, and full recovery. That's where the energy sector tends to perform. Okay, and we are looking at VLO in this particular video, right? And I want you to see that not only we are just looking at the individual stock, but we do have a bigger top-down analysis approach that's supporting this particular investment idea as well. Okay, so I want you to be able to see that why I'm pretty confident and why I'm personally focusing on this particular company. Okay, so that's the macro and the sector. So now let's jump into the seasonal. Later I'll jump into the seasonal. Okay, but let's look at the individual company first. What are some of the advantage and what are some of the key things that perhaps you want to be a bit cautious on? Okay, so in my model, I look at both quantitative and of course qualitative. Okay, but qualitative here is a little bit discretionary, it's a bit subjective depending on your personal knowledge in this industry and of course with regards to this company. Okay, so I won't dive into this, but it's important to understand generally what this business is, what's the business model, do you understand it, do they have some kind of economic mode, is the management solid? Okay, so these are all qualitative. You need to understand the company, right? But the quantitative is actually more kind of like objective. It's easier for investor to look at it because they are all numbers. Okay, and to me, these are some of the key metrics I look at. Okay, I do have a quantitative score of maximum 21. VLO, Valero Energy, as of today, the updated quantitative number is only 6. Okay, which to me is not a very fantastic idea, right? You can see the quantitative scoring of orange score here means that I would like to be a bit cautious. It's not like a sure invest kind of company. Okay, but at the same time, we also want to take note that this is in the energy sector, right? And energy sector itself, there is certain cycle, and you know it's being affected by the general economy as well, hugely, especially if we are talking about oil market and things like that. So I also factoring those. Okay, so what this then tell me is that it's definitely not like a solid company, for example, like Intel, like Microsoft. They are all very solid company where, you know, I wouldn't be too worried even if I invest and get in at not a very good price. Okay, but Valero over here, of course, because it's cyclical, I want to be a bit cautious in terms of, I would say, a bit more stringent, a bit more strict in terms of how I'm going to enter, which price I'm going to enter, and of course the timing here. Okay, so that's the idea of it, and of course, doesn't mean this company can perform better, right? The idea here is right now is doing pretty bad, but it also gives us the opportunity to identify a potential turnaround, which means that if moving forward for the next 2 years, this company tends to recover, the upside on this can be very, very big. Okay, so from the fundamental quantitative perspective, that's how my analysis is. Okay, so let's go over to the valuation toolkit. Okay, generally I consider three valuation model. The DCF model, which is, you know, some commonly, often people relate that to Warren Buffett models of value investing. Okay, we also look at Graham's number, but of course, based on Valero, we can't have a valuation here because, of course, there's certain numbers that is in negative and that doesn't work out. Okay, which means is of course based on Graham's number, then the valuation tells us that this is not a solid company. Don't invest in it. Okay, and of course I also based on DDM, which is dividend discounted model. This is utilized for companies that I'm investing with the intention specifically for dividend growth investing model. Okay, so it's interesting to look at this company here from both the DCF model, which is value investing, as well as the dividend discounted model. Okay, so based on the DCF value investing model, you can see that the current price of VLO is at $59.26. based on the valuation model, the IV, the intrinsic value, the fair value, okay, as of now is already at $70. Okay, which means that we are right now at the undervalue or discount. Okay, and the discount here is right now about 18% discount. So if today you invest in VLO at $59.46, you are actually buying at a cheap price already. Okay, a discount of 18%. Now, if you look at the DDM model, it's even interesting because VLO has been quite consistent in paying out its dividend. Okay, and not only that, the dividend growth rate is pretty high. Okay, and based on this model over here, you can see with the expected dividend growth rate of 14.47%, which is the average of what it has been doing for the past. Of course, the terminal growth rate here, we don't expect VLO to maintain 14.47 perpetually, right? Every year after that. Eventually, there will be what we call a terminal growth rate, a growth rate where it will stop there and it will never increase higher from there, right? That's the average. So if we just expect like half of it, 7%, okay, and we expect an average return of 8% per year from this investment, then you take a look at this. The current IV based on this model is $800. That's crazy, right? And if you take a look at that, what it means is that the current price here is like super discount. Okay, but of course, you need to also understand that doesn't mean that price is definitely going to go to 800. This is just a valuation model to give us some reference as to relative to the current price right now in the market, is it worth investing into it? Okay, so I want to show you here, this is actually from gurufocus.com. Okay, again, these are all numbers, so it's gonna be, you know, some might report a little bit different and such, but again, I'm taking it from an average perspective. I'm not just basing this to make my investment decision. Okay, so if you take a look at this, okay, during the past 12 months, Valero Energy average dividend growth rate was 9.7, but if you factor in, you know, past 3 years, okay, this is 1 year, right, 12 months. So if you take in past 3 years, that was 14%. If you take 5 years average, that's like crazy, 26.5%, right? And of course, if you take the past 10 years, the average dividend is 31, even crazy. Okay, so you can see that when I take here about 14.5%, I'm actually just taking the past 3 years average. Okay, of course, it's going up and down. Okay, so again, I'm not, you know, this number here on the IV is $800. I'm not so, I mean, you need to put in some discretionary filter as well and understand that, you know, it doesn't mean that the price of this company is going to reach $800, okay? Or it doesn't mean that the fair value, of course, is at $800, okay? But knowing that the value investing model, we are already at a discount, and of course, DDM, we are also at a discount. It tells me that it's a very good stock to pay attention to. The upside potential is definitely there. Okay, and of course, I also look at seasonal trade ideas, which means that I'm looking at historical period. Is there a pattern where this particular company tends to rally? Okay, and what are the reliability factor of this? Okay, so if I take a look at the seasonal, of course, there are some other seasonal trades here. I just want you to focus on VLO. Okay, so maybe I'll expand this a bit. Okay, I just want you to focus on VLO. Okay, so there is a seasonal pattern. Okay, and this is where it's interesting as well because we are very near to this particular date. Okay, and again, of course, this one here we are providing to our premium clients, to our premium subscribers. But you know, I'm giving you a hint over here, right? Of course, this is not the only one, but we are talking about it, and I want to incorporate that in. Okay, so again, you know, good for you if you watch this video. Okay, and you watch it up to here. Okay, this is a free trade idea for you as well. Okay, so based on seasonality, what this means is that between 14th of December to the 1st of February, there's a high accuracy or reliability factor that this particular company tends to rally. Okay, and that's at 80%. What it means is that if we base our statistics on the past 10 years, VLO, there are 8 years out of 10 years during this particular period, the stock rally. Okay, and the average return based on this 10 years is about 9.71%. This is already factoring the 2 years that actually didn't rally. Okay, so when I put all these things together and I go to the technical chart, that's where things gets very interesting because I have the macro perspective, I have the sector perspective, I have the fundamental, quantitative score, qualitative score. I do have the valuation, and then of course I also look at seasonal. When everything comes together, okay, this becomes quite a solid investment thesis. But doesn't mean that it's 100% going to make money. It just means that it builds up that conviction, it builds up that confidence in really focusing on this particular chart. Okay, so when I take a look at this, this is on the daily chart. Okay, we do see that as of the past 1 to 2 months, this stock price has already started to form an impulse push to the upside. Okay, so technical for me is not gonna be like incorporating a lot of different indicators and making it complex. It's pretty straightforward. Okay, so over here what we see is that the price has been coming down and we saw this trend structure being broken. Okay, and we do have this push to the upside at a very fast momentum, strong momentum, and that to us is an impulse. Okay, so what I incorporated over here is a quick analysis on volume profile. Okay, where we want to identify at which area, which price there tends to be significantly more volume, more activity. Okay, and we have identified based on this indicator over here, the price of around $49.98, which is very close to $50, seems to be huge in volume, huge in activity. And I put in a fib as well, and you can see it coincides with a 50% Fibonacci retracement. Okay, so what this means is that if I'm looking to invest in it, which definitely I'm very interested in this particular stock, okay, based on all the various factors, I'll be looking for this to perhaps come down a little bit, okay, towards this $50 area where I'll accumulate this particular stock. Okay, and of course, if I factor that into seasonality, that's where things are interesting, right? I have a very specific date of entering, which is over here, 14th of December, which is next week. Okay, so if you take a look at that, if I put in, you know, an estimated kind of like date, which is 14th December, okay, which is this vertical line here, you know, we might, if I go to the fall, okay, we might start to see perhaps this come down a little bit, but of course I don't expect this to drop down very fast. Okay, so there are two ways that I'm gonna get involved in. Okay, one is I'm gonna base on seasonal with all the factors supporting this as well. I'm gonna get in on the 14th. Okay, and depending on how price goes, I will of course manage this trade, this investment idea, and of course if this drop down towards around the $50 mark, that's where I'll accumulate more of this particular company. Okay, so I hope that's pretty clear. It's a very complete and comprehensive analysis. I really want to utilize this opportunity here, where all these pieces come together, giving you a holistic, complete analysis and approach of how we actually identify a particular stock for investment purposes, and of course some of you might be trading as well. Alright, so I hope you actually gain something from it, and of course if you do, share with me what is the one key takeaway. Again, I believe there might be more than one, but I want you to actually identify one key takeaway, okay, and share with me in the comments below, because by doing that you're actually helping yourself to concretize the learning, the takeaway. Okay, and share with me how will you apply this to your own trading and investment journey. The idea here again is not just about the idea that you know which stock to invest in, but my intention and objective here is to also share with you the whole process so that you'll be able to take away something that you'll be able to apply in your own investment journey. Okay, and of course if you have yet to like and subscribe this video, would appreciate for you to do that, because it will help the YouTube algorithm to understand and reach out to more investors, and hopefully this video is able to help them and provide them with some insights as well. Okay, so make sure you like and subscribe and turn on the notification button so that whenever I release a new video, something like this, a trade recap, an investment opportunity, or even an educational video, you'll be the first one to be notified. So with that, I'll see you in the next video.